Are you looking for ways to grow your company? Well, in this video, we cover 8 ways you can fund expansion as a small business. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. Life as a business owner is rarely smooth sailing, but the last few years have presented a multitude of extraordinary challenges that have shaken even the most resilient of companies. A combination of Brexit, COVID-19, and the cost of living crisis, amongst other factors, have made dreams of expansion feel much more daunting. And for many businesses, any plans for growth have been put on ice. However, despite the doom and gloom often aired in the media, there are still plenty of avenues for small businesses to consider for securing funding. And with good planning and research, there's no reason why you can't pursue your goals for growth. Today, we are going to look at 8 key strategies for funding business expansion suitable for small businesses in the UK. So let's get started. Number 1, apply for a business grant. As a UK-based company, the government offers a wide selection of approved grants that can potentially support your plans to expand. A business grant is a financial award given to companies by the government or a government-backed organisation to support business development and expansion. A cause which the government is keen to promote, especially now as they focus on strengthening the UK economy. These grants can be used for a variety of purposes, such as research and development, investment in new equipment and technology, marketing, and workforce training. Though grants are undoubtedly an attractive option for small businesses, they come with pros and cons. As mentioned, grants can be particularly beneficial for the economy, helping upskill employees and provide new jobs. Plus, you won't need to worry about managing repayments or losing any income, since grants are essentially free money for your business. On the other hand, the application process can be lengthy and complex, and there's no guarantee that your company will successfully secure funding at the end of it. And if you are successful, then it's likely you will be subject to additional reporting and monitoring, which can be time-consuming and may require extra resources. Many government grants are targeted toward a specific industry or business activity, so your company will need to carefully check eligibility criteria before applying. Generally speaking, grants are more a short-term solution rather than a long-term strategy for growth, so it's likely you will need to consider an additional supporting strategy to sustain your expansion, though grants are still a great way to start. Number 2. Take out a bank loan. Bank loans are still a very popular funding option for ambitious small businesses and startups looking to secure the necessary capital to expand their operations. Again, they can help to fund things such as new equipment, hiring more staff, expanding marketing efforts, or opening new branches. They come in a variety of flexible forms that allow a company to choose the terms that are best suited to them. Depending on the lender in question, your financial history, and the type of loan, they can come with low interest rates, often making them an affordable solution for small businesses. If you have a good relationship with your bank and a well-researched business case, this could be a great option for you. It's recommended that you seek some advice before applying for a loan to ensure you are likely to be accepted and can comfortably manage the repayments involved. It's also important to note that your company may need to demonstrate specific credentials to qualify for a business loan. Conducting thorough research beforehand can help you understand these requirements and increase your chances of securing funding. The third strategy we have for you today is apply for a guaranteed loan. If you have tried the traditional means of lending, such as a bank loan, but you've been unsuccessful in your application, then a guaranteed loan could be suited to you. Now, as the name suggests, you are guaranteed to be approved regardless of your financial circumstances or credit history. These schemes have been specifically designed to facilitate lending to smaller businesses that are unable to obtain finance due to a lack of security or proven track record. While guaranteed loan schemes such as the government's Enterprise Finance Guarantee can help lower the cost of borrowing and offer flexible repayment terms to small businesses, the eligibility terms are strict, and businesses applying will need to meet certain conditions to qualify. Number 4 is debt financing. Perhaps one of the most popular options businesses will consider when looking to fund their expansion is debt financing. Now, this involves borrowing money from a lender such as a bank, a financial institution, or a private investor. The funds are then repaid over a period with interest. Debt financing can be a good option as it allows company owners to retain full ownership of their business without giving up any equity, like with other forms of financing, which we'll explore shortly. The interest paid on this type of financing is tax deductible, which can help a business to lower the overall tax burden. That said, debt financing does of course involve regular repayments plus interest, so it's vital that you ensure you'll be able to keep on top of these payments to avoid any penalties or additional charges. Whether or not debt financing is the right option for you as a small business will ultimately depend on your financial circumstances. Next up is equity financing. For some small businesses, equity financing can be a good solution for securing capital for your ventures. This strategy involves selling ownership shares or equity to investors in exchange for funding. Funding can be supplied by a range of investors such as private equity firms, angel investors, which we'll look at in a little bit more detail shortly, or venture capitalists. This option allows businesses to quickly access significant amounts of capital to fund expansion projects, and unlike debt financing, it does not create a financial burden on the business. However, this comes at the cost of a partial stake in your company, which means you may have less control in decision making, which can be frustrating, especially if you have specific plans and concepts in mind for your company. That said, equity investors can also bring valuable experience and expertise to the table, which can help small businesses to scale their operations and channel their growth more effectively. Raising equity financing can be a drawn-out process as companies will need to pitch to multiple investors before finding the right partner. Moving on to number 6, reach out to an angel investor. Angel investors are another potential option that may be worth pursuing, particularly if your small business is in its early stages. An angel investor is typically a high net worth individual, often an entrepreneur themselves, who invest their money into a business that they believe to have high growth potential. Your small business can benefit from an angel investor in several ways. Not only can they fund your growth and help develop your company financially, but they can also offer a wealth of experience, along with invaluable insights and guidance. Often, they will also have access to an extensive network of industry contacts that can help you connect with prospective customers, suppliers, and partners, fueling growth even further. There are some drawbacks involved with this option, such as sacrificing a stake in your business and losing some control in exchange for their investment. This can often equate to sharing some of your decision-making responsibilities, which could increase the chance of conflicts relating to how the company is run. Once again, this can be a time-consuming and challenging process since you'll need to pitch to investors and negotiate your terms. Now let's take a look at crowdfunding. Perhaps less conventional than other avenues to fund expansion, crowdfunding can be a highly effective route to raising capital for your growth. And it's a strategy that's becoming increasingly popular with independent small businesses. A crowdfunding initiative allows businesses to raise funds for their expansion through online platforms such as Crowdfunder, Kickstarter, or Indiegogo, to name just a few. These platforms connect small businesses with a large pool of potential investors and local residents interested in supporting innovative and entrepreneurial projects. Not only does crowdfunding offer a simple approach to pitching your ideas, but it also bypasses the need for complex financial arrangements. If you have an innovation or target audience in mind, it can also be a great solution to gauging market demand before going full steam ahead with your ideas. While crowdfunding can work wonders for brand exposure and publicity, it's important to recognize that not all initiatives are successful. Crowdfunding has become particularly competitive in recent years, meaning you'll need a compelling campaign to help you stand out, as well as patience and time on your side, since campaigns can take a while to gain traction. As such, this method is probably not suited to all projects. And lastly, number 8, lean on your friends and family. If you are in the early stages of your business journey, then it's not uncommon to turn to close friends and family for financial support as a means of quickly securing funding. Depending on your arrangements and the interest you're willing to pay, this could prove a worthwhile investment on the lender's part. The option could be a hassle-free way to get the wheels in motion with your project. And once your business develops, you can then look to secure funding elsewhere when you have a proven track record. Now, of course, mixing business with friends and family could present risks. And if things don't go to plan, this could add strain on relationships. So there you have it. We've covered 8 effective strategies small businesses can employ to fund their expansion. Which one is right for you will depend on your specific goals for the future and your current situation. Remember, whatever strategy you pursue, it's crucial to thoroughly research your options and seek advice before fully committing. We hope you have found this video useful, and we wish you all the best with your business. If you have any questions, please leave a comment below and we'll come back to you. For more videos just like this one, don't forget to hit the subscribe button. And thanks for watching. See you next time.